Good morning, everyone. We are glad to see our friends in the US, and we hope everyone is keeping safe from the COVID 19 as we discuss the business climate in the Philippines. In the wake of the pandemic, we want to highlight the fact that still a good time to do business in the country, especially as we promote our Make It Happen in the Philippines Global Investment Campaign. Let me start by saying that the Philippines has always been in close economic relationship with the US. We consider US as an important trading partner and investment source, especially in the electronics and IT BPM sectors. In 2020, even amidst the pandemic, the US remained to be one of the biggest trade partners and foreign investors in the Philippines. Out of 224 countries, US was our third major trading partner with a total trade value of $16.4 billion. US was also our second largest export market with a total export value of $9.72 billion and our biggest import supplier with an import value of $6.64 billion. Our top one major foreign investor for 2020 was the US with $712.8 billion total approved investments that went into transportation and storage, administrative and support services, manufacturing, real estate activities, and information and communication sectors, among others. As mentioned by Consul Ryan, prior to the pandemic, the Philippines boasted very strong economic fundamentals, growing at an average of 6.6% from 2016 to 2019. We have become the third fastest growing economy in Asia. This strong growth was supported by the resurgence in our manufacturing sector, accounting for nearly 20% of the Philippine economy. The Philippines was also on track to breach the $4,000 mark to become an upper middle income country by 2020 if COVID 19 did not happen. With the rest of the world, the Philippines suffered economically as our GDP hit negative 9.5% in 2020. However, evidence of our recovery can be seen with the mitigation of quarter on quarter GDP decline. In other words, there was growth quarter on quarter, and the country's GDP continues to improve with a further reopening of businesses and wider access to public transport. The Board of Investments also hit $20.55 billion in total approved investments for 2020, our second highest despite the restraints brought by the pandemic. We continue to gain momentum as registered investments for the first 2 months of 2021 showed a sustained growth of 156% year on year compared to the same period last year. The total $2.5 billion approved investments for the first 2 month period generate more than 10,000 jobs once fully operational. The Philippine Manufacturing Purchasing Managers Index, or PMI, which is our barometer for manufacturing activities, likewise showed a rebound with 52.5 index in January, and this was sustained in February. As you know, any number above 50 marks growth in the sector. We consider this as a major rebound, especially coming from a huge decline of 31.6 index at the height of the Philippine lockdown in April last year. Moving forward, the World Bank in its December 2020 report projected the Philippines to rebound with a 5.9 growth for 2021 and 6% growth in 2022. The CEO magazine also identified the Philippines as one of the 10 best countries to invest in post-COVID era, dubbing it as the tech hub of Asia. For the long term, Capital Economics forecasts that the Philippines, boosted by an increasing population that act both as a huge domestic consumer and labor market, will become the world's 18th biggest economy in 2050. The Philippines' resilient economy may be attributed to its key advantage, its people. 45 million highly skilled, educated, dedicated, and cost-efficient workforce with very low attrition rate. The country sits on a demographic sweet spot. The median age of our population is 25.7 years old. This young and dynamic crowd not only boosts domestic consumption and local demand, it also continues to use innovation as an engine for growth. Thus, from 100th position only about 3 years ago, the Philippines in 2020 placed 50th in the Global Innovation Index, its best rank ever. We produce over 790,000 graduates annually across several disciplines such as engineering, IT related fields, education, medicine, and health related fields. With advances in technology, top emerging jobs in the Philippines include robotics engineers and cybersecurity specialists. At the start of my presentation, I have mentioned our close trade and investment relations with the US. Thanks to GSP and MFN, 70% of Philippine exports entered the US duty free. We are also the only ASEAN country with GSP Plus that allows us duty free access to EU for more than 6,000 tariff lines. We also continue to benefit from preferential access to other ASEAN countries all around the globe through other FTAs like the EFTA, covering Switzerland, Norway, Iceland, and Liechtenstein, and cooperation agreements with RCEP, which is comprised of the 10 ASEAN member states and its 5 key partners, namely Australia, China, Japan, Korea, and New Zealand. RCEP is intended to create a more business-friendly environment in the region, encouraging closer integration of economies and providing more stable and predictable rule-based system of trade. As shown here, RCEP carries a significant economic weight, accounting for almost a third of global 2019 GDP with a combined GDP of $25.84 trillion. The said trade bloc is bigger than the United States, Mexico, Canada Agreement, and European Economic Area. As the Philippine economy recovers, we are more confident of achieving our pre-pandemic growth rates and beyond. To this end, we are facilitating greater trade and investment by continuously pursuing reforms to foster better business environment. A major game changer is the corporate recovery and tax incentives for enterprises, or more commonly known as CREATE. Signed by our president just last March 26, CREATE will rationalize, modernize, and offer more incentives to investors, making the investment climate in the Philippines significantly more attractive. Under CREATE, qualified activities can enjoy incentive packages of up to 17 years that include 4 to 7 years of income tax holiday, after which an option to avail the 5% special corporate income tax rate based on gross income earned and or enhanced deductions for a period of 5 to 10 years. Other key features of the CREATE law include the removal of the export and nationality bias, which means that if the activity is listed in the Strategic Investment Priorities Plan, even a foreign investor can target the domestic market and still be eligible for incentives. There is also the reduction of the corporate income tax rate from 30% to 25% for domestic and foreign corporations, including non resident foreign corporations as well. The president also has the flexibility to grant incentives for highly desirable projects with minimum investment capital of $1 billion or at least 10,000 job generation for a period of up to 40 years. The CREATE incentives will be made available to projects listed under the SIPP or the Strategic Investment Priorities Plan, such as those that involve job and value creation, industrial development, R&D, and generation of new knowledge and intellectual property. The period of availment of incentives will be much longer if the project will make significant contribution to industry and technology development and or will be locating outside the national capital region and other metropolitan areas. We also remain committed in supporting liberalization to enhance our country's competitiveness. This means amending laws like the Retail Trade Liberalization Act, the Public Service Act, and the Foreign Investments Act. Together we create these reforms and review of other economic restrictions with the intention of removing barriers for entry will attract more investments and create more jobs in the Philippines. Furthermore, the 2020 decision of the Supreme Court has disallowed a construction regulatory rule that only allows foreign firms to special contractors licenses when undertaking Philippine projects. This decision now allows foreign firms to apply for regular contractors licenses just like the Filipino construction firms. To this end, we shall be setting just a lower equity threshold which shall be reserved for Filipino SMEs in the construction industry. When investors were asked on what resonates most with them when they think of the Philippines, overwhelmingly they said that the Philippines are known for their can do attitude and make it work mindset. They use their talent and dedication to survive and to thrive amidst all adversities. This unique Filipino trait and mindset is the inspiration behind the Make It Happen in the Philippines. Launched in November last year, MIH is a sustained multi-market, multi-sector lead generation marketing and communications campaign based on international best practices and evidence. It initially covers five sectors, namely electronics, automotive, aerospace, IT/BPM, and copper nickel products, and at least 17 target markets, including the US. Priority sectors for promotion to the US include IT/BPM, medical products, automotive, including e-vehicles and batteries, electronics, agribusiness, and infrastructure such as telcos. To conclude, please allow me to reiterate our commitment to the realization of your company's business goals in the Philippines. As the focal point of contact in the country, we at the BOI can render facilitation services and handhold you through every step of the process. Our Philippine Trade and Investment Center offices around the U.S., especially the one in New York headed by our STR Nick Bautista, will also be very happy to assist you. As the Philippine economic situation continues to improve, we hope that you will look at our country more closely as a valuable contributor to your global business growth. Our goal is that with your support, we will generate more jobs and employment for our people, which will give them a more comfortable and higher quality of life. As we build back better, we aim to continue our country's economic growth story in the post-COVID future. That's why we enjoin you to partner with us and make it happen in the Philippines. Thank you.